So today I'm going to show you how I select a stock to use for my trading. I'm going to show you what indicators I use to know that it is overall an upward moving stock. And I'm going to show you how I select my entry points and also my exit points. So stick around. I'm going to use Allstate to show you exactly how I select it, get in, get up, and get out. Hello my friends, this is Legend. So today I'm going to show you using Allstate how I determine if it's a stock that I want to be in. Then I'm going to show you how I select my entry points, and I'm also going to show you how I select my exit point. So if you enjoy this type of content, please make sure to hit that like button, as it would be much appreciated. So first of all, you've got to find out if it's a stock you want to have and own, and how in the world do you determine that? Well, for me, and these are my opinions, and I'm not a financial advisor, but in my opinion, I like to look at a 1-year chart and a 5-year chart. All right, so here we are on that 1-year chart. And again, like I said, we're looking at Allstate for this example. And that 200 EMA, which is this red line, you want it to go up and to the right. You want those candles to stay basically on top of that MA 200. It can dip down, but we want to see that it is going to indeed recover back up above it and then stay above it for a while, right? We do not want big dips down and then hanging down underneath it for a long period of time before coming back up. I personally don't want that kind of stock, because I want to make sure that if I have to hold this stock over time, history says that it's going to move up. So I look at the 1-year chart and I'm looking at that MA 200. If it's moving up and to the right, and those candles are staying above that MA 200, that's the first thing I want to check. And then the second thing is I want to look at a 5-year chart. And this is the 5-year chart. And there you can see there's that MA 200 again, and it's going up and to the right. Those candles are staying above that MA 200, so that one checks out as well. So 1-year and 5-year are now checked off as being long term. They seem to want to stay above that 200, and that 200 on the 1-year and 5-year seem to be moving up and to the right. So now that I got a good feel that this stock overall wants to go up, now I just need to determine when is the right time to get in. Okay, we're back on that day interval right here. So each one of these candles are 1 day. So the first thing that I want to do is I want to turn on my Bollinger Band. Well, right now I've got my moving averages on, so let's turn that off. And now let's turn on the Bollinger Band. And there we go. The two things I want to look at here is, are the candles under the middle of that MA 200 at whatever point that I want to buy it? And I also want to see if that RSI2 is below 10. And I've got a little purple line. It's a very faint purple line. But there is a line right here, and you can see right here it says 10, right? So you can draw an imaginary line, if you can't see it, right across here. And when I hover over those sections, you'll see this number right here will drop below 10 if it's under it. And of course, if it's above it, it'll be a higher number than 10. So I think a good example point to show you would be right here, right? As we were coming down, we were at the bottom of that Bollinger Band, right? But for this candle here, even though we're at the bottom of that Bollinger Band, is it below 10? It's not. It's at 13.78, right? So I want it below 10. In general, that's what I'm looking for. Doesn't have to be, but that is normally what I'm looking for, that RSI2 down here to get to, below that 10. The next day, it's not below 10. Then it shoots up, right? A little bit on that RSI2. We got a green candle. So we're still looking for that number here to be below 10. So we just keep on going over, and right here, we drop down on an RSI2 to 2.88. And this candle right here is that same point. It's a red day, it dropped down, and we are a good 2/3 of the way below that midpoint. So that's a good position to be in. It doesn't always have to be at the bottom of that Bollinger Band, but you definitely want it on the bottom half, and I prefer it to be closer to the bottom than closer to the mid, right? And for this case, it is closer to the bottom than it is to the midpoint. And that RSI2 is below 10. It's sitting at 2.88. So that could be a potential buy using my method here. And we'll just use that closing price, and that's 189.95. So we'll just round it to 190, okay? And we'll just say that we bought 10 shares at 190. And then the next day, it's below 10 again. We're sitting at 1.81. Now, it did get as low as about 187.20 right here, right? But again, just using that closing price, it closed at 189.11. So we'll just round that down to 189 even. And we'll assume we bought 10 shares there as well. So we got 10 at 190 and we've got 10 at 189. So if we average that out, we've got an average share price that we bought these at 189.50, right? Because that's the midpoint of the two. And we own 20 shares at that average. So now we are in, and does it give us another buy the next day? Well, we are still on that bottom half of that Bollinger Band, but the RSI2 is at 62. So that's a no. So we're just going to say that we got in at this point and this point. And that gives us our average of 189.50. And now let's look to see what is our stop price. Well, to find that out, we're going to turn on the moving average and we're going to turn off the Bollinger Band. So right here is our buy points, right? Right here and here, those two candles. Now I threw a little arrow right here as we bought here and we bought here. Now the point that I'm looking at to get out at is the MA5, and that's a 5-day moving average. That's this green number right here under the MA, and it's this green line. And that's the line that I'm going to follow to help me decide when I'm going to get out. So I am in it at 189.50. There you go. I drew a line. It's a purple line right here. That's our buy-in point. And our get out point, like I said, is the MA5. Well, if this is our buy point, the next day, the candle here is above our buy price, but it's still under the MA5. So I'm not setting any kind of stop yet. Same with this day and the same with this day. Now it actually does not get above that MA5 until this candle right here. Now on this candle, we actually have a nice little pop up and it goes as high as 194.34. Now remember, we're in it at 189.50. So what am I going to do here? Since it is a green candle, has moved up a good bit here off of that MA5, I'm going to go back here and try to find that lowest point for my start. And I want it to be at least one candle behind that day's candle. And if this is that day, and if this is, say, today, then I'm going to set it right here if I'm wanting to make sure that I protect my profits. Okay, and if I do, then I'm going to set it for this point. And don't forget this number up here, that green number, that's the MA5. So when I hover over that point right here, you can see it's 190.20. So I can set my stop at 190.20 and I'm in it at 189.50. That is a profit. It's a small profit, but it is a profit. Then the next day, we have a red candle, okay, which means that's a down day. Do I move it from this point right here? Okay, I was sitting right here at this 190.20. Do I move it up one more to stay that one day before it? I could, but since this is a red candle, I normally would just stay right where I'm at, and I would just stay right there. Same thing with this candle. It's a big red candle again, and for this one, I could either stay right where I'm at, or I could bump it right up to that next candle, because you can see that the bottom of that wick is sitting at around probably 193 area, and that MA5 for this candle right here is sitting at 191.08. So that gives me a little bit of buffer so that if it did come down, it could still kick me out, but it'd have to drop another couple bucks before it did that. So that would be a game time decision if I wanted to just leave it right where it's at, or did I want to move it up? Because that is 2 days ahead, right? And if I did, then I would set it right here at this 191.08 and move on to the next day. And the next day we would be right here at this green candle. Now we've got a nice move off of that MA5. So what do I do there? And it's a green candle moving up. I'm going to move this from this point right here, and I'm going to move it all the way back up, and I'm going to jump a couple days, right? Because I want to try to capture the gains if I can without trying to get stopped out. So I would move it up to right here underneath the day before, and that MA5 now is 193.25, and I'm still 1 day behind it because we're at this candle. And you can see each day it starts moving up, starts moving up, starts moving up, and still moving up, right? And each time it moves up, I'm 1 day behind it, so I'm just moving up. So that way, whenever we're right here, and if this is the current candle, I would be sitting at a MA5 right there, and that would be 203.19. Now, as it goes, we're still getting a lot of separation between the candle and that MA5, so I am still staying that 1 day behind it. So I'm sitting at 205.81 for this candle, right? For the MA5, 1 day before the current candle. And this arrow being the current candle right here, I'm setting that MA5 and I'm sitting at 205.81. So the next day, what does it do? We have a red candle and it pulls back hard, right? Now let's just see. Do I get kicked out? Because this one did drop down below that MA5 and it's got the wick, right? And I am currently setting right here at this 205.81. So how far down did this candle come? It got as low as 207.31. So it did not kick me out, but do I move it from this point? Well, because we had that red candle pullback, I'm going to stay right where I'm at. I'm staying at 205.81. Now the next day, if it does come down, it's going to kick me out at that 205.81. So be it. But I don't want to necessarily move it right up to that next point right here and pretty much guarantee myself to probably get kicked out the next day, not knowing if it's just resting and then going to take back off again. That's the reason I don't want to move it up, because I don't want to get kicked out. But if I do, that's okay. So I'm still sitting at this 205.81, and you can see these candles here, they're all still under that MA5. So what am I doing? I'm just sitting right here at this 205.81, and I'm just sitting still, right? Hanging tight. And we still got red candles right through here, so I'm not moving. Now, I'm a few days back, right? But I'm not moving because it's red and below that MA5 here. Now, this one here does pop up above it. Now, if I wanted to move it up from this point, since we do have that separation again, I can do one of two things. If I'm sitting right here at this 205.81, I could move it up one to about 208.20, or I could go ahead and bump it right up to this point right here, and that would be 210.04, right? Because we got that green candle, we've got a little separation off of that MA5, and it looks like it's starting to turn up a little bit. So we could move it to right there at that 210.04. Now again, that is the user's decision to do so, and you have to make those calls. Sometimes it's a good one and sometimes you get stopped out early, but always remember, if you're getting stopped out in profit, it's still making you money. So on this candle here, we moved that stop to that MA5 point at a 210.04. And then what happens? We get another red candle, so we're not moving it, but we are sitting at 210.04. And we're pretty close. Don't know if it's going to kick us out yet or not, as it looks like it's trying to move up, but we're still just riding that MA5. So I'm just going to continue to hang out at this 210.04. And then the next candle, we get a green candle, but again, it's still setting on that MA5. I'm going to sit back here and I'm just going to wait and see and give it some time. It might trade sideways and then pop and go again. And then I can jump right up to that next point and start riding it up even further. But as you can see, it started trading sideways, and then it started coming down. Well, eventually, my 210.04, which is right here, it gets kicked out right there. Okay, so at this point, I'm kicked out at that 210.04. So we're just going to round that to $210 even. I got in right here and I rode this MA5 right on up. I got kicked out right here at this MA5 at 210 even from this drop in this candle right here. So that kicks me out at 210. So what did I end up making on the trade? So I got kicked out at 210. And if I subtract the average cost per share, and that was $189.50, that's going to equal $20.50 on this move. But remember, I had a total of 20 shares. So now I take that times 20 and we just made $410. And in what period of time was that $410 for? Well, we got in right here was our first buy-in, and that's 1028, and it kicked us out at about this candle right here of 1202. So that was very close to about 1 month, and I made $410. Now, what did I get as percentage-wise off of that? So we'll open a second calculator right here, and since my average was 189.50, and that was 20 shares, so that's times 20, I had an amount of $3,790 invested, and I made $410. Okay, so what is that percentage? I can take the amount that I made, and I just divide it by how much I had invested, $37.90, and that equals 0.108. Take that times 100 to change that decimal to a percentage, and you've got 10.8% that you made in that 1 month. Now that is some good money. 10%, almost 11% in 1 month. And that's not too bad at all. So 10% in a month, and if you were to estimate that out for the year, you would just simply take that times 12 months, and essentially that's about 129% for the year. Now, granted, this doesn't happen every time, right? This just happened to be a very nice move that got you $410 in the move from here all the way up to here. But I just wanted to show you what I used to get in and then what I used to get out. And in this case, it was a nice move. Now, as you can see over here, I'm just now getting another one, right? And I actually did buy some shares of this one. And as you can see, you had a couple opportunities right here since it is below that 10 and we are on the bottom side of that Bollinger Band. This here is another potential buy spot, right? And I did end up buying some shares here, and I also notified my Discord members when I did so and why I did it. And if you would like to get those notifications along with being able to get access to my spreadsheets, then come on over, join the Discord, check it out, and see what you think. But like I said, I did end up buying some shares because it was below 10 on the RSI2. We are on the bottom side of that Bollinger Band, and we already know that the 1 year and 5 year chart, the stock tends to want to go up and to the right. So when we were sitting at the bottom of that Bollinger Band, under that RSI2, I went ahead and I bought some shares. And one other thing to notice here is if I turn that moving average back on, turn the Bollinger Band off so we don't get confused, then you can see that that candle's right here sitting right on top of that MA200. Now, as we saw in the previous, if it did dip down below it, it wanted to come back out of it. So when it was sitting right on it at the bottom of the Bollinger Band and that RSI2 was below 10, I went ahead and bought some shares. And now it was trading sideways, and then today we had a pop. Look at this pop. What a nice move up. It moved up 2.8%, almost $6 move just today. So what am I going to do, right? What do I do now? Well, we've got the moving averages turned on, and what am I going to look for? I'm going to look at that MA5, and I can zoom in on that MA5 right here. That is what I'm going to want to follow. Now it's sitting on top of that MA5, right? it is going through it. So I am a little hesitant to set that stop right there because that is today's candle. And even if I set it over here, right, it's going to be still pretty much the same spot, right? Still going to be pretty close to about the same sell point. But since this is going through it and it is today's candle and I don't necessarily want to get kicked out, I am hesitant to set that stop at this 202.35. Now it is above my average because my average is 200.99, pretty much $201, right? So I could set it right here just to protect me on the downside, and I would set it at this MA5 202.35. And if it did get sold, I would make $1.35 in a matter of just a few days. Now that's $1.35 times how many ever shares I have, right? And sometimes you make a lot and sometimes you make a little. Don't try to make the market give you what you want. Sometimes you have to just play what the market's giving you. But like I said, if I did set the stop, I would set it right here at this 202.35, as this is the day before the current candle. And since it did close all the way up here at 206, sitting back here at 202.35, I may be okay. But like I said, since it did go through it, right, it's at 201.71 is as low as it went. I would hate for this to do the exact same thing, come through it, kick me out, and then start taking off. I would prefer to get a little separation between this MA5 point of where I would set my stop and the low of that current candle. So currently, I am going to just hold off on setting that stop until tomorrow. Now, if we open up here at this 206 area, close to 207, and we continue to move up, then no doubt about it, I'll set my stop right here at this MA5 point, set it for 202.44, and be happy and satisfied if it did come down and kick me out, because it could happen. I don't want it to, but I would much rather come out with some extra dollars in my pocket rather than having to wait for this thing to turn back around if it did come down. But being at the bottom of that MA200, I feel like I'm in a good spot right here. So that's the reason I don't necessarily want to get too jumpy here and set that stop at that MA5. I need this candle to move on up. So we get another green candle tomorrow, good separation between that MA5 and that candle bottom, then I'm definitely setting my stop right here at this 202.44. So super excited about this. And also, if you're in my Discord, you also know that I did also sell a put on Allstate. And the put that I sold is down here at this line at this 195. It was coming down, hitting this MA200. I sold my put right here at 195, and that's just simply because that was a good support line over here and a possible resistance line right in this area. So if it was going to come down, hit that 195 and close under that, I wouldn't mind owning those shares. So give them to me and I'll ride this thing right on back up. But if we're going to get a big green candle like this from here out until mid-December, which is the expiration date, then I'm all right with that too, because my option will expire worthless and I'll just look to do it again on another day. But while that is moving up, I'm earning money because I also own a few shares as I'm using that MA5 as my kick out point. So what do you think about that? Did it make sense? Did you follow along what I'm doing? How I'm deciding if it's a stock I want to first get into, right? Have to first decide if you want to get into it. And that's where the 1 year and the 5 year chart come in. Then when do you know when to get in? And that's when I use the RSI2 and the Bollinger Band. And then how do you know, or when do you get out? And that's when I flip it over to the moving average. And that's when I flip it over to the MA5, which is a 5-day moving average. And once that stock starts moving up, I can just sit there and follow that MA5 right on up until it kicks me out. So lots of fun, and it can get pretty exciting. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It would be much appreciated. And most importantly, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.